welcome to the deep dive. You shared some information with us about the GBU Future Flex Fixed Index Annuity, and that's exactly what we're going to unpack for you right now. Our mission, to really get a handle on what this annuity offers, especially if you're looking for growth potential, but maybe without all the market roller coaster stuff.
Exactly. This annuity is really positioned as offering a blend of stability, growth, and adaptability for retirement savings.
Okay.
The key things they highlight up front are its potential for, well, strong accumulation, the protection of your initial principal, and then that option for guaranteed income later in life. Oh, and it's designed so you can add more money to it over time.
Okay. So how does it actually aim for that growth then? It looks like it's tied to the performance of three specific Barclays indices. Let's see. The Agility Shield Index, the U.S. Fortune 500 12% Index, and the U.S. Tech 12% Index. And you can choose if you want to look at their performance over 1 or 2 year periods. Now, what's with that 12% in a couple of those index names? Is that a guarantee?
Good question. It likely indicates some kind of internal mechanism within those specific Barclays indices, maybe related to a potential annual return target or volatility control around that level. They're definitely not your standard direct market trackers.
Gotcha.
What's also interesting is this idea of booster fee options, where you can choose to pay a small extra fee, 1% or 3%,
Okay.
for the chance to get a higher participation rate.
So hang on. If the index does well, paying that extra fee could mean you capture a bigger chunk of those gains. Is that right?
Potentially, yes, that's the idea. But even if the index doesn't perform well, your initial money is still safe, right? Because it explicitly states zero downside risk.
Right. Zero downside. And it also says no caps or minimums on the earnings potential, which, sounds pretty appealing on the surface.
It does sound good, yeah. But it's crucial to remember that your actual interest credited is still a percentage of the index's growth. That percentage is the participation rate. So while there aren't explicit caps, your upside is still effectively governed by whatever that participation rate is for the term.
I see. So it's not unlimited growth, it's growth limited by the participation rate.
Pretty much. What's also key here is that these participation rates, whatever they are reset and guaranteed at the start of each term you choose, whether that's 1 year or 2.
Okay.
And you also get the flexibility to shift how your money is allocated among these different index strategies, or even a fixed interest rate option each year or every 2 years, depending on the term.
Right. So the foundation, the bedrock here, is that principal protection. That safety net for your initial investment is obviously a big deal for folks planning retirement.
Absolutely.
And then there's the guaranteed income for life piece. That's a core promise of many annuities, offering that predictable income stream when you decide to stop working.
It provides that certainty. And this is all backed by GBU Financial Life. Looks like they're a pretty established company, founded way back in 1892.
Wow, that's a long time.
Yeah, and being a member-owned, not-for-profit insurer with that kind of history, it suggests a focus on, the long haul and maybe a more conservative approach to managing risk, which kind of aligns with offering those guarantees.
Makes sense.
Yeah.
Now, what about getting your money out if you need it before retirement? Life happens, right? It looks like there's some ways to access it.
Yes, there are liquidity features.
You can apparently take out up to 10% each year without a penalty. And if you don't take it 1 year, it can roll over to the next, letting you take up to 20% potentially.
That's correct. That cumulative feature is interesting. Plus, there's another point. Every 4 contract years, you get 100% penalty-free access to the funds.
Oh, okay. Every 4 years.
Yeah, and additionally, there are specific waivers mentioned, like for nursing home stays or hospital confinement, which could allow surrender-free access if you face certain serious health challenges.
Good to know those are there. Now, in terms of putting money in, it seems pretty flexible. They accept both qualified retirement funds, like from an IRA or 401k, and non-qualified money, just regular savings. And the age range for starting is really wide, 0 to 95. Plus, you can add more premiums over time, although there are limits, an annual max of $5 million and a lifetime cap of $10 million. Seems quite high.
Those contribution options, especially being able to add over time, can be really useful for building up your retirement savings gradually. However, it's definitely worth being aware that if you take out more than those penalty-free amounts we talked about, then surrender charges will apply. And these charges, which vary a bit, can apparently reset after each withdrawal you make beyond the free amount. So that's something to watch.
Okay, important detail. So just to wrap it up then, this GBU Future Flex Annuity seems to offer a way to link some retirement savings to the potential growth of these specific Barclays indices, but crucially, with a safety net protecting your initial investment.
That's the core pitch.
You also get some flexibility in accessing your funds, like the 10% annual withdrawal and the security of a guaranteed income stream later on, all coming from a very long-standing financial institution.
Which brings us, I think, to the final thought for you, the listener. Thinking about your own financial landscape, your tolerance for risk, and what you really envision for your retirement. How might an option like this, one that tries to balance market-linked growth potential with guaranteed safety, actually fit into your overall strategy? It's definitely something to mull over, how the specific structure aligns with your personal needs and long-term